Hi everyone, very good evening. Good evening, and welcome back to the session. Yeah, happy one, everyone. So let's continue the session. So basically, we were talking about the order part in the last day session, and then it's a continuation of the last day session, and we will be continuing with the same system of area today as well. And we will only be starting with the part B, that's the 25 marks area if you have an adequate time today, or it will be starting tomorrow, because 25 marks area is pretty simple as compared with the 50 marks area, so you'll be able to cover it very quickly. So let's start with the part of 50 marks. So in yesterday's session, we were talking about the areas of audit risk, risk of material misstatements, and risk of material misstatements along with analytical procedures. And we have also done a question on that called the Athens question. And today we will be focusing on the areas of business risk, which is another important part in the 50 marks area. And this is also frequently being tested. Well, either your 50 marks question will contain a risk question that may be from analytical procedures, or that can also be from the area of business risk, that can be from the area of audit risk, and from any of these areas. And basically, when you're getting a business risk question, it won't be a single question. You will be having one more additional part in addition to the business risk. Basically, the business risk comes as a combination of the business risk and risk of material misstatements with analytical procedures. All right. So let's start with the discussion of the business risk part. And basically, the business risk questions will range from roughly around 10 marks to 16 marks. These are the usual patterns in which this is being asked you in the course of your exam. And when it comes to the business risk part, it is unlike the audit risk. This is purely based on assumption. But we know that in the audit risk part, we will be using some set of assumptions, but still we will consider certain standards, and we should talk the possibilities of having material mistakes in the financial statement. Here we are not talking about the material mistakes in the financial statement, but we are talking about the possibilities of having some issues with the company's objectives and strategies. That is what we are going to discuss about the business risk. All right, so let's start with the topic of business risk. So guys, what do you mean by business risk? What do you mean by the term business risk? Any idea?
Inability of the company to
Business
generate
risk.
revenue. And
what do you mean by the term business risk? Can you please talk off the mic? What do you mean by business risk?
Inability of the company to generate enough revenue.
Is it the same as that of the audit risk? No, it is definitely not the same as that of the audit risk, but it is entirely different from that of audit risk. And there is a similarity, or there is a connection between the business risk and audit risk, because the business risk might sometimes lead to audit risk or risk of material misstatements in the financial statement. So when talking about the term business risk can be termed as something that happens within an entity. Possibilities of having issues within an entity. Consider like this: a company has taken an objective. The company's objective is to achieve a profit of 10 million this year. But unfortunately, due to the impact of COVID-19, the company is not able to achieve this objective. That's business risk. Consider like this: many of the company's employees have resigned from the entity during the year, and due to which the company is not able to run its operations properly, or the company is not able to run its administrative side properly. Again, it's business risk. Consider like this: the company has applied to multiple banks for getting a bank loan to continue with their research and development, but unfortunately, none of the banks are responding to their request, and no one else is providing them with adequate amount of finance. Again, it's a business risk, because the company won't be able to achieve its objectives. Then, the company has taken a strategy. Companies have decided to run a business as part of a promotional activity, but unfortunately, that does not went well. Again, the company's strategies won't run well. Then it may lead to a business risk. So these all are the possibilities of having business risk. So which means that a company might have taken a strategy or objective, but unfortunately, due to certain situations like I've already mentioned, or due to which the company's actions or inactions might not make a company able to achieve its objectives and execute its strategies. And this is something called business risk. So that is what is mentioned here. The business risk is a risk resulting from significant conditions, events, circumstances, actions or inactions that would adversely affect the entity's ability to achieve its objectives and execute its strategies. Or the entity might be setting some set of inappropriate objectives or strategies, and this is something called a business risk. So always keep it in mind, business risks are pure assumptions. So the company has taken some set of objectives or strategies, but in some situations or some occasions or company's actions or inactions, which will lead the company not able to achieve their objectives, and this possibility is known as business risk. And the business risk mainly arises due to three components. Same as that of the inherent risk, control risk, and detection risk, which leads to audit risk. There are also three components here in business risk as well, which are the financial risk, operational risk, and compliance risk. So basically talking about the financial risk, this is the situations that affect a company's financial stability. Say for example, the company is unable to pay debt on time, the company is not having adequate amount of finance, the company's gearing is very high, then the company's loan amounts are not being paid on time, or the company is breaching its loan covenant, then the customers are not providing the company the amount of borrowing on right time, which means the creditors are not able to recover money from the company, the debtors are not paying the money on time, then the company maybe inability to provide the supplies with adequate amount of payments on time, and all these issues can lead to financial risk. Same as that, there are some factors that affect the company's day-to-day operating activities, and these are something called operational risk. Say for example, the company is not able to complete the customer orders on time, then the company are having difficulties, operational difficulties, like company is not able to find adequate amount of raw materials, company is not getting adequate amount of labor services, then the company's missions are not properly operating, or there are mission breakdowns, then the company is producing faulty inventory, customers are raising complaints against the product quality, all these will result in operational risk. And other than this financial risk and operational risk, there is another main risk, which is compliance risk. There are possibilities where the company might not be following the laws and regulations, and due to which the company needs to pay huge amount of penalties and fines to the government. And this is something called compliance risk. And there are also situations where the company is not paying the tax and other dues on time, and due to which the government might take action against the company. And in case if the company has done some sort of illegal activities, or if the company haven't complied with the proper laws and regulations, then there are also chances where the government or the authorities will request the company to end its operations. This may ultimately result in its going concern difficulties. So these are other possibilities of having business risk. So this is all about business risk. So whatever factors or whatever conditions that may affect a company in achieving its objectives or strategies can be called as a business risk. And it will be containing three sets of risks. These are the financial risk, operational risk, and compliance risk. All right. So, well, there is also a reporting format that is being available for writing the answers relating to business risk also. So you will be getting a scenario same as that of the audit risk, and the examiner will request you to figure out the business risk from the scenario. So in that case, while presenting the answers, you need to follow a certain format. First of all, you need to identify the business risk. So let it be anything. If it is called in the book that the company's external environment has been changed by law, and some new laws and regulations are introduced by the regulatory authority. That situation, you will be identifying the same situation here. You will be quoting that the company's environment has changed and new laws and regulations have been implemented by the regulatory authorities. That will be the same thing that you will be mentioning as part of the identification part. Then second, you need to talk about the impact, or you need to explain this particular risk. What will happen if the external environment has changed? And you need to explain there that there are chances that the company might not be able to comply with the laws and regulations on time. And if the laws and regulations are not paid on time, then the government might take strict actions against the company. The company's operations will be affected, and there will also be compliance issues. So this is something called explanation for the business risk. And thereafter, you need to incorporate the impact as well. You need to show the impact that this particular risk will create, that this particular business risk will create in the company. Well, when it comes to the case of audit risk, we were writing about the impact within the financial statements. Here we are writing the impact within the company. What happens to the company in case of this particular risk arises? Therefore, you will be showing the impact over the company's cash flows, then the company's profit or margin, then the impact of the company's going concern, then reputational damages, impact over the company's reputation, goodwill, impact over the company's revenue. So this is how you will be showing the impact. Because basically when it comes to the area of the audit risk, you might be mentioning about the impact over the company's assets and liabilities, as well as over the company's income and expense, and ultimately in the profit. But here we will not be mentioning anything with regard to the financial statement. We will be only be showing the company's ability in achieving all these objectives. There will be cash flow difficulties for the company. The company might not be having adequate amount of profit, or the company's margin might not be able to achieve. There will be issues with the company's going concern. There will be reputational damages for the company. There will be matters that will affect the company's goodwill, and there will also be issues that might affect the company's revenue. This is all you need to mention with regard to the business risk. So first of all, you need to identify the business risk from the scenario. You need to explain that one in your own words. You need to mention about the assumptions that are already, and you must also show the impact within this specified areas. So you will be writing the answers in this format. And I hope you still remember the area of audit risk. While writing the area of audit risk, we have classified the risk into two types, right? First one is a risk which is based on standards, or the risk which contain accounting treatment. And there are also risks which are general risk in nature. Risk of material misstatement, okay, both are same. Risk of material misstatements also. Then, when it comes to the risks which are based on standards, how do we use writing? First of all, we need to talk about the materiality of the audit risk. Then we need to talk about the accounting treatment. Then about what will go wrong, what is the possibility of going wrong in this case, what will go wrong, and impact on efforts. And when the risk came as general case, then there we only need to write about the risk identification part. Then you need to explain why we will call it as a particular risk, and we will also show the impact on financial statements. But when you're writing general case, you can talk about the overall impact, okay? Overall impact on efforts. And this is how you used to present the answers of the audit risk. So this is all about the business risk and audit risk. So when it comes to the business risk, we will talk about the issues that may affect an entity's ability in achieving its objectives. And when it comes to audit risk, we will mention about the possibilities of giving an inappropriate opinion on the financial statements. That's the only difference between the business risk and audit risk. All right. Then, now we will just do one thing. We will discuss a sample of risk, sample of business risk, and that might appear in your exam. And these are the common risks. And I've also included this note within the link itself, and you can download it from the Eximus website. And this business risk file contains roughly around 4 pages, and this includes all the basic risks that used to appear in your exam. So we will just quickly brush through each of the risks. Consider like this. It will be mentioned in your question that the company is having some sort of international operations. And what happens if a company is having international operations? What will be the business risk in that case? We know that when a company is doing some sort of international operations, they need to comply with the laws and regulations of the country in which they are trading their goods and services. So they need to follow both the local legislation and as well as the foreign legislations. There can be chances that they might not be following this, and this may lead to compliance issues. Then, in addition to that, we also know the fact that political and economic instabilities in the countries will appear. And when there are political and economic instabilities, the company won't be able to achieve its objectives because they won't be able to plan and budget properly. That's another business risk. And in addition to that, there are also cases where foreign currency issues may arise. So if these are not properly managed, what will happen? The company's profit and the cash flows will become volatile and will keep on changing. So we won't be able to obtain a fixed income or fixed revenue from the overseas countries. So these are the three business risks associated with international operations. So whenever this point is mentioned in your question that a company is having some set of international operations, you need to talk about lack of compliance with international laws of regulations, political and economic instabilities, and foreign currency issues. And next one, when it comes to the reliance on a single supplier, it may be mentioned in multiple questions that the company is relying only on a single supplier. What happens if you are having only a single supplier? Yeah, we know that the whole amount of supply will be coming from a single person. So if there is some issues with the transportation, or if the supplier hasn't provided the goods to our company on time, what will happen? We won't be able to continue with our manufacturing activities, and we will not be able to satisfy our customer demands. So it may automatically affect the reputation of the company, and the revenue will also be lost. So this is what happens when we rely on a single supplier. Then next, regulatory issues. What happens when there are regulatory issues? Yeah, this is the point that I've already mentioned to you. So it will be mentioned the question that the company's external environment has been changed and laws and regulations have also been changed. And in that situation, we need to talk about two things. The first thing, that what happens if we haven't complied with laws and regulations? If we haven't complied with laws and regulations, then automatically there's a possibility that the compliance issues, the non-compliance issues might arise, and due to which we need to pay huge amount of penalties and fines, and this may lead to cash outflows. And we can also talk about the other side as well. So in case if we haven't complied with the laws and regulations, in case if we have complied with the laws and regulations, then it might result in huge amount of cash outflow for the company, because the company will be having many set of compliance costs. So for example, if we are having a factory with an exhaust pipe length of 50 meters, the government regulation might be to change the 50 meters pipe to 100 meter pipe. And in that situation, we need to spend a huge amount on the capitalization expenses. And while we spend an amount on capitalization expenses, what will happen? Yeah, we need to spend a huge amount of cash outflow. So it may affect the cash flow ability of the company. So that is what happens as a business risk when it comes to the regulatory issues. Then, suppose there are some claims against the company with regarding the environmental issues, or with regarding the environmental damages that the company has faced. So if there is any claims against the company, then what will happen? Automatically, there's a possibility that we need to pay huge amount of penalties and fines again to spend the money on the company's compliance issues. And again, there can also be chances of having some reputational damages for the company. Okay. Then diversification and rapid growth. Diversification and rapid growth. It may be mentioned that the company is going on in an expansion stage, but it may also be mentioned that the company is diversifying their operations into issues. And in that case, we know that the company is diversified. So the company won't be able to focus on the existing. And they cannot be anymore. That's the if the business is not successful, then automatically money cannot be used to be further. In addition to that, we know that when we spend a huge amount of money in diversification, there can be possibilities that the company might face cash flow. These are the issues that are associated with that.
Customers will be having high amount of purchasing power. Hello, can you hear me now?
Yes, sir. Now we can hear you.
Okay, fine. All right. So the reliance on a few key customer. It may be mentioned in the question that the company is having only a few key customer. And what happens if a company has only got few key customers? These customers will be having at most power, and they will be able to influence the company. So in order to enable the customers to be retained within the entity, we might need to sacrifice with our amount of profit. So because we will be reducing the selling price, we won't be able to reduce the cost, because if we reduce the cost, automatically the quality of the product will be decreased. Therefore, there can also be chances that the customers might go from the company and they will start contracts with other competitors of ours. So in that situation, we need to reduce the price. And by reducing the price, automatically what will happen? The margin of the products will be low and the company will face difficulties with revenue as well as the profit. Then, change in key management. So the question will be specifying that there are some changes with the key management persons within the entity, that the directors of the company have changed, or some other persons within the entity might have changed, which were in the key management persons. And in that situation, we can state that when the key management persons or the company's key directors have changed, there's a possibility that the new directors might not be having experience with regard to the business. Therefore, they will take a substantial period of time to get aware about the external market as well as the things that happens within the entity. And by that time, in case if they take any policies for the business, automatically the policies might not be that well as that of an experienced person. Therefore, there can be chances that the company might go on with inappropriate strategy and the company will not be able to achieve its overall objective. So that is what happens with the changes in key management persons. Then again, the examiner might be mentioning that the company is operating in a very sophisticated business like a pharmaceutical company. And this business might require a large set of licenses to sell its product. Then in that situation, what we can state there, the company might be having a lot of products that are in research and development stage, and the company might need to get license for these products in order to start the sales procedures. But unfortunately, if the company is not getting license for this product, what will happen? There can be chances that the whole amount spent for the research and development will be worthless, because if we haven't got the license, we won't be able to sell this product to the end customers, and it will also affect the company's revenue generating abilities. Then there's a possibility of having court case and bad publicity against the entity. Again, the same research that we have explained earlier. It may lead to reputational damages for the company, as well as the court case will also take a large sum of cash flows, because we might need to pay penalties and fines to the court, as well as we will also be paying legal fees to the advocates and other solicitors. Therefore, it will create both the reputational damages as well as the cash flow difficulty for the company. Then, agreement for the use of brand name. It may be mentioned that the company is running its business by using brand name of another entity. So if a company uses a brand name of other entity, what will happen? There can be possibilities that if something has taken, or if some claims have been raised against the users of the brand name, so automatically our business will also get affected. So for example, if I'm running the brand name of Samsung, I'm using the brand name of Samsung to run my business. And if any legal action is taken against the Samsung group, then automatically my business will also get affected as I'm running the business under the Samsung's brand name. And there can also be chances that the whole amount that I have spent for this brand name will also go as worthless. So automatically it will create damages for the company, as well as there is also a possibility that the company will be facing cash flow difficulties. So this cash flow difficulties point can be used at any point. So just consider like this: wherever there is possibility of having huge cash outflows, in that situation, the company will face cash flow difficulties. Then skilled personnel. So the company might be running its business by using skilled personnel, such as the scientists in the research and development stages and all. And there can be chances that the skilled personnel might be changing from our company to the competitor entities. So what will happen? Automatically, we won't be able to continue with our research and development. And in addition to which, the competitors will gain advantage over us, because they have got new scientists from our entity who are having in-depth knowledge about our company's business activities and the future policies. So this competitive advantage will be gained by the competitive entities. Then it may be mentioned that the company is involved in luxury products business. So if a company only has got luxury products, then the risk is very high, because we know that the luxury products will be consumed by the customers only when they are having sufficient amount of money. So if the market is facing recession or some other economic crisis, then the sales will be very less for the luxury products. And if the operations are diversified, the company will definitely struggle to meet its revenue generating abilities, and it will affect the company's cash flow at a very large extent. Then expansion, finance raised by bank loan. It may be mentioned that the company has raised a huge amount of finance from bank loan. When a company raises a finance from the bank loan, the first thing that will affect is that the fact that the company might breach its existing loan covenants. And in case if a company has breached the existing loan covenants, and in that case, the company need to reimpose the whole amount of loan amount to the providers of the finance at a single extent. So automatically, in case if a company need to pay back such a huge amount at a very short span of time, the company won't be able to meet its going concern abilities. So it will affect the company's going concern. And the business expansion and inappropriate strategy. Suppose a company is going for expansion, and if the strategy is inappropriate, automatically the amount spent for the new business will be completely worthless. So there is always a risk like that. Then non-compliance with regulations in advertising. So let it be any sort of non-compliance. In every stages of non-compliance, the only risk that will arise is two possibilities. The first thing is that the company will face cash flow difficulty as huge amount of money is spent for penalties and fines as well as for paying of the legal expenses. In addition to that, it may create adverse impact on its brand name and over its goodwill. So it may create reputational damages. So this is happens in every stage of non-compliance. Then next, cash flow and liquidity issues arising from spending amount in relation to ongoing research and development. So if a company spends huge amount of money for the ongoing research and development, simple, the company's amount spent for this kind of research and development will only be realized by the company after a few years of time. Say, for example, if a company has spent more than 10 million in this year, this amount will get materialized only after 4 or 5 years once the product is launched in the market. So the company is spending a huge amount at this point, and that may cause cash flow difficulties for the company, and the company may face to meet its other working capital requirements and all if the company is spending the whole amount of cash flows within this research and development. Then patent infringements. So it may be mentioned in the question that the company uses certain patent for running its business, and the competitors might also be using certain patents. So there can be chances that some competitors might breach our patents, right? So say, for example, they might use our patented product for their own gain. And in that case, we will file a petition against them, and for which we need to spend huge amount of money as part of the legal expenses to fight against the competitors. And there can also be chances that we will breach the patent right of the competitor, that we might use some of the competitor's patent without getting permission from them. So in that case, the competitor will file petition against us, and for which we need to pay huge amount of penalties and fines. So there can be two possibilities in case of patent infringement. We might be breaching the patent rights of the competitor, or the competitor might be breaching the patent right of us. So in case if we file case against if we file petition against a competitor, it may create legal expenses for us. Or if the competitor files any petition against us, then we need to pay huge amount of penalties and fines. Then lack of funding available for research and development. So this is a common risk which used to appear in almost all the exams. The company might be facing some sort of difficulties in raising fund in relation to the research and development. What happens if a company is not having adequate amount of fund to finance the research and development? Automatically, the issue is very simple. The company won't be able to meet the company's research and development criteria, and the company won't be able to complete the research and development on time. And in that case, the amount that have been spent by the company till the date for the research and development will be worthless in case if the company is not able to convert the research and developed product into a final product. So in that case, the company will face difficulties with regarding to the revenue of the issues, because the revenue will be generated only once a product is being launched in the market. And if the company is not able to fund the research and development, definitely this product will not be launched in the market, and the company will face revenue difficulties. Then high technology and competitive industry. It may be mentioned that the company is part of a high technology and competitive industry. Then there will be rapid changes in the market. There are only two options for the company. Either the company need to cope up with the changing market, for which the company need to spend huge amount of money for research and development, which may create cash outflow for the company. Case number one. Case number two, if a company is operating within a high technology and competitive industry, there can also be chances that the company might need to sacrifice in its selling price to cope up with the competition. So if the company reduces the market price or the selling price of the products, what will happen? Company will face issues with regarding revenue as well as in meeting the profit targets. So that is what happens when the high technology and competitive industry is the place where the company operates. So two possibilities: either the company need to spend huge amount of money for research and development, or the company need to sacrifice in its selling price. Then it may be mentioned that the company's products are being imported from a foreign supplier. So if the company is importing the products from a foreign supplier, then always there is a possibility. Again, we will be making the amount payments to the supplier in foreign currency, which may result in forward exchange contracts, use of forward exchange contracts and other things. And if we haven't used the forward exchange contracts, automatically the expenses will get volatile, and automatically our profit and loss will be volatile, because when there are changes in the exchange rates, automatically it will affect our expenses as well as the profit of the company. Finally, when there are import from external countries, automatically there is another issue. There will be transportation issues. So when we import from other countries, this product might not reach us on time, so that our production will get halted. We won't be able to deliver the products to the customers on time. It may result in our reputation, and our reputation will be damaged. In addition to that, if the products are not provided to the customers on time, definitely it will also affect the profit as well as the revenue generating ability of the company. So this is what happens when we import goods from a foreign country or from a foreign supplier. See, these are the basic set of business risks that we have got during the course of our exam. And in addition to this, there are also chances of having additional risk as well. Definitely there will be some additional risk, but you will be able to understand the risk, the way in which the risk appears in the scenario by going through these notes. And once you have got an overall idea, you can also find the new risk from the scenario in the same manner. So always keep this one in mind while writing the risk, that is a business risk. You are not going to mention anything that will impact the financial statements. Instead, you will be mentioning about the impact that will be created over these areas. That's the cash flows, profit, then over the margin, going concern, reputation, goodwill, or company's revenue. So consider like this. Just go and read the scenario and understand whether there is anything that will affect the company's cash flow. Is this an issue that affects the company's profit or reputation? Or is this an issue that will affect the company's going concern? So just think like this. So whatever that appears to be a risk that affects any of these factors can be called as a business risk, because all these factors are the objectives of the company, and anything that might not make an entity to achieve its objectives might be we'll be considering it as a business risk. So always consider these points and always remember these key terms in mind, and all these things need to be included during the course of your exam to score good marks in the business risk, because you need to identify each of the business risks. You need to explain about the impact that will be created by the risk, as well as you need to explain the risk properly. So first of all, you will be identifying directly from the question, then you will be explaining that risk in your own words. You can add your own assumptions there, as well as you need to mention the impact that will be created by the business risk within the financial statements also. So this is what you need to include with regarding the business risk area. That's all about it. Is it clear, guys? Is it clear? Okay, fine. So now we will just do one thing. We will quickly do a question on business risk now. Yeah, there's a question called growl in your scenario. There's a question called growl. So please take the question number 13, growl. So basically we have got two questions here. In addition to the usual areas, we have got two questions here. The examiner has asked about the business risks that are being faced by the growl company, which is a 10-mark question. In addition to that, there is also a question that requests you to write about the risk of material misstatement. You need to mention about all the risk of material misstatement that appear in the scenario. That's a 14-mark question. So in total, you're getting 24 marks from the scenario. So which is approximately around 50% of your pass mark, right? So you're getting 24 marks from this area. So we'll just start with this question. So please go through the question now. Please take question number 13, growl in your revision kit. It's in page number 49 in the 2020-21 Kaplan revision guide. So please take this question, grow. And please start reading this now. So in this kind of questions, while going through the scenario, you need to write both the businesses as well as the risk of material misstatement. So while reading the question, please do one thing. Just consider like this. We'll be getting same business risk and audit risk, risk of material misstatements from this scenario. So you may use 3 colors for highlighting this. During the course of your exam also, you can use 3 colors to highlight the question. First of all, you can use 1 color for identifying the business risk. Then you can use another color, maybe this yellow, for writing about the risk of material misstatement. And there will also be possibilities of having both the risk of material misstatements and business risk from a single area itself. So use another color for any points that will mention both the business risk plus risk of material misstatements. So for example, we know that in case if a company is having foreign currency transactions, it may result in both the business risk and the risk of material misstatements. So please try to consider like that. So take 3 colors. One should be used to highlight the business risk and risk of material misstatements, another color for the business risk, and another color for the risk of material misstatements. Okay, yeah. So please continue with it. Okay, please continue reading the question. Please let me know once you're done with the question. Okay. All right. So now let's start discussing the question. We will be finding out both the business risk and the risk of material misstatements from the scenario. So let's start with it. You are a manager in the Fuan company, responsible for the audit of Groll company, a company which produces circuit boards which are sold to manufacturers of electrical equipment, such as computers and mobile phones. It is the first time that you have been managed this audit client, taking over from the previous audit manager, Bob Harron, last month. The audit planning for the year ended 30th November 2012 is about to commence. And you are provided with the following exhibit, and we have received some exhibit here. So is there any risk from this scenario? Is it a new client?
New audit manager may not have sufficient skills and experience to audit this client.
Exactly, that is what I was about to say you. Don't mention about that here, okay? Because it's the first time you have been assigned to this audit, but still the audit team is same. The audit partner is same, all other audit seniors are same, audit juniors, articles, everyone remains the same. And you are the only person who have been new to this engagement. So definitely if something goes wrong from your part, then also there are many other persons to review about the works that you have already undertaken. So you don't want to mention about any detection risk over there. You should mention about the business risk only, detection risk only if there is any issues with the company's, the issues with the company's audit engagement team. If it is a new client in total, then it may lead to a detection risk at the first phase. Then the next thing, is it necessary to mention about any of the detection risk here? No, it is not required, because our question provided by the examiner is a question on the risk of material misstatement. And in the case of risk of material misstatements, we won't be considering any detection risk. We will be considering only about the inherent risk and control risk. Okay. All right. Then, so this is a requirement that is being provided by the engagement partner. I'm meeting with the other audit partners tomorrow to discuss two audit clients, Groll Company and Hawkins Group. I recently had a meeting with M, the finance director of Groll Company, and we discussed a number of issues which will impact on audit planning. I have provided you with some information in the form of a number of exhibits, which you should use when planning the audit of Groll Company. Using Exhibit 2 and 3, I would like you to prepare briefing notes for my use in which you evaluate the business risk faced by Groll, evaluate the risk of material misstatements to be considered when planning the audit, and design the audit procedures, and so on and so on. So we'll be considering the first two requirements here, and we haven't got any other points from this area. And now we are moving directly to the scenario. So this is the main scenarios area. And from here, we will be finding out both the business risk and the risk of material misstatements. So let's start with the first paragraph. Groll Company's principal business activity remains production of circuit boards. One of the key material used in production is copper wiring, all of which is imported. As a cost-cutting measure in April 2012, a contract with a new overseas supplier was signed, and all of the company's copper wiring is now supplied under this contract. Purchases are denominated in foreign currency, but the company does not use forward exchange contracts in relation to goods import of the wiring. Groll Company has production facilities, one of which produces goods for export market, and other produces goods for domestic market. About half of the goods are exported, but export market is suffering competition from cheaper products overseas. Most domestic sales are made under this contract with approximately 20 customers. So what all are the business risks here? So we will first of all find the business risk from this scenario. So what all are the business risks associated here?
It's been imported, so there would be aviation issues and transportation issues.
Exactly. We are importing products from the overseas country, right? the products are being imported from a new overseas supplier. So we know that the goods are being imported from a new overseas supplier. Definitely there will be issues with the companies. Which are the risk? First thing will be exchange rate fluctuations, right? Because we will be importing goods from the overseas company. Therefore, we will be paying the amount in other currencies, and due to which we will be facing many kind of exchange rate fluctuations, and the expenses and the profit that the company will receive will be in a volatile nature. We won't be getting a fixed amount. So that's the first risk from the new overseas supplier. In addition to that, exactly as you have mentioned, we can also mention about the transportation issues. So since the goods are being imported from another country, the goods might not reach us on time due to aviation issues or any other issues, and due to which we won't be able to complete the goods production on time, and the goods will not be delivered to the customers on time, due to which the the revenue generating ability of the company will be affected, and also the company's reputation might also be damaged. All right, so that's business risk analysis from that point. Then any other issue? Any other issue?
No hedging techniques used, so that would be Forex.
Basically, well, the company is not using the forward exchange contracts, and that is why we mentioned about the exchange rate fluctuations. Okay, because in case if they're using forward exchange contracts, there won't be any exchange rate fluctuations, right? So you can combine both the points together, as well as it's mentioned here, all the copper wiring are now supplied under this contract. So which means that the company is having only a single supplier. So you can merge all these points together and we can include it within a single set of points. Okay. Then, other than this, is there any other issue? Only these two risks. Is there any other risk from this area, from this paragraph?
Half of the there is increased competition and they would be losing revenue because there are cheaper goods abroad.
Yeah, we are exporting half of our products to the overseas market, and the export market is facing facing higher competition because some of the competitors are providing the products as cheaper price in the overseas country. So as we have already discussed in our discussion session, what happens if we are facing huge amount of competition in an overseas market? Definitely there is only single possibility. When it comes to an overseas market, we must reduce the price of the product, right? So when the selling price of the products are being reduced, automatically it may lead to revenue generating ability of the company, and the company's margin will also get affected because the company won't be able to meet its profit objectives. So that is what happens when there are cheaper products that is providing us with due competition in the overseas market. Then what's other risk?
Domestic sales are made under only 20 customers. So
yeah, the company has got only 20 customers in total. So what will be the business risk in that case?
Loss of customers would cause loss of revenue and profit generating.
Okay, fine. Then in addition to that, is there any other risk associated with the same point? The customers will also be having high amount of bargaining power, due to which we might need to reduce the price of the products. Again, it may lead to revenue generating ability of the company, and also it can affect the company's profit. So that is what would happen as part of the business risk here. So these are the business risks associated here. So we have mentioned about the competition in the overseas market, about few key customers, then about the transportation issues, and also about the exchange rate fluctuations. And now let's talk about the risk of material misstatements from this area. Is there any risk of material misstatements associated here? Any risk of material misstatements? Is there? Any possibilities of having risk of material misstatements here? Yes, there is. You can talk about the same business rules, right? Because the company is having overseas supplier. So what will be the risk of material misstatement there? IAS 21 Forex, right? Because when we spend amount to an overseas country, we will be paying these amounts in another currency. And we know that when it comes to the initial recognition of the foreign currency transactions, we need to measure it as the which rate? Spot rate of the transaction. And there can be chances that the company might be using inappropriate exchange rates. And in case if the company have used inappropriate exchange rate, it may lead to what happens in that case? The company's expenses and payables will be either understated or overstated when a company uses inappropriate exchange rates. So that can be one risk of material misstatements. What will be the subsequent measurement of the foreign currency transactions? We know that at the year end, what we need to do, all the monetary
Closing rate.
all the closing payables and the monetary items must be retranslated to the closing rate. And when we retranslate the monetary item, they will be either
Gain or loss.
gain or loss. And where do we need to recognize the retranslation gain and losses?
PNL.
PNL. And there can be chances that the company might have recognized that within the
OCI.
OCI. That will be the risk. And in addition to that, you can also mention about the non-monetary items as well. There can be chances that the company might be retranslating
Inventory.
non-monetary items at the year end. And in that case, what will happen? The non-monetary items such as the inventory will be either understated or overstated. Okay. Then any other risk from this area? Any other risk of material misstatements? There are cheaper products in the overseas countries due to which our company's products are facing very high competition. So is there any associated risk there? Is there? There is. What's the risk?
Inventory.
Exactly, that's it. Inventory. What happens to the inventory?
It should be measured at lower of cost in NRV. It would be that the selling price falls below the cost.
Exactly, that's the point. There can be chances that the products that we have exported to the overseas market might become obsolete or slow moving. And in that case, as per IAS2, we need to record the inventory at lower of cost or NRV. However, there can be chances that the company might not have carried out proper valuation of the inventory, leading to overstatement of inventory and understatement of related expenses. So that's the risk of material misstatements there. So these are the basic set of risk of material misstatements and business risk associated with the first paragraph. Then let's move on to the second phase about the recent developments. In early November 2012, production was halted for a week at the production facility, which supplies the domestic market. A number of customers had returned goods, claiming fault in the circuit board supply. A number of customers had returned the goods, claiming fault in the circuit board supply. On inspection, it was found that the copper used in the circuit board was corroded and therefore unsuitable for use. The corrosion is difficult to spot as it cannot be identified by eye and relies on electrical testing. All customers were contacted immediately and where necessary procedures recalled and replaced. The corroded copper remaining in the inventory has been identified and separated from the rest of the copper. So what's the business risk here? So this paragraph is basically based on a set of risk of material misstatements, but still there are also some set of other business risk as well. So what are the business risk here?
Fines and penalties.
Reputational risk.
And reputational damage.
Exactly. Reputational damages and fines and penalties, right? So you can talk about that. So when the company have provided faulty goods to the customers, there can be chances that the customers might raise claim against the company and the customers might also file a suit against the company. In that case, the company need to pay huge amount of penalties and fines for this. And there can also be chances that since the customers have been requested to return all the products back to the company, these customers will not be ready to purchase any further products from our entity. So due to which it may affect the reputational abilities of the company, ultimately leading to decrease in revenue and the profits of the company. So that's the thing. Then any other business rules from the first paragraph? Nothing much, right? So what's the risk of material misstatements associated here? What's the risk of material misstatements?
The provision should be recognized.
Yeah, we can talk about the provision because in case if there is any suit that have been filed against the company, and if there is probable future cash outflows, then the company should have recognized adequate amount of provision for the amount of litigation and claims. And what else?
Inventory might be overstated as its NRV would be reduced now.
Exactly. These products are being returned back to the company, and since the product are recalled and still remaining in the rest of the inventory, therefore we need to record this inventory at lower of cost or NRV. And if these inventory are not in saleable condition, what we need to know? We need to write off this inventory, and or else our inventory will be overvalued and the related expenses will be understated. Okay, then what else? What else? They have
Refund
mentioned,
liability.
sorry?
Refund liability.
So what kind of liability? Contingent liability means that in relation to what?
In relation to IFRS 15, a refund liability should be recognized.
Exactly. Yeah. So we have recalled the products, right? So when we recall a product, we need to create a provision for the refund. So a recent refund provision should be maintained because these customers might have already paid amounts for the products. Therefore, since the products are recalled, we know there is a future cash outflow for this recall. Therefore, we need to recognize the amount in relation to this provision. Then there can also be chances that some of the customers might have already provided the product back to the company. And in that case, what should be the accounting treatment? The revenue should be derecognized. And if there is any receivables in relation to these customers, that must also be written off. And in addition to that, the inventory should be reinstated. And there can be chances that the company might not have done this, leading to overstatement of revenue, receivables, as well as understatement of inventories. So that is what happened if the company has not properly recognized the amount of recall. So these are the set of business risk plus risk of material misstatements associated here. Okay. Then the work has recently started on new production line, which will ensure that the growth company meets new regulatory requirements, prohibiting the use of certain chemicals, which come into force in March 2013. In July 2012, a loan of 30 million with an interest rate of 4% was negotiated with the growth company's bank, and the main purpose of the loan being to fund the expenditure necessary for new production line. 2.5 million of the loan represents an overdraft, which was converted into long-term finance. So what all are the business risks associated here? Business risk, first of all.
The loan may not be obtained.
The loan may not be obtained. Or what happens if the loan is being received by the company? That's the main risk, right?
Increased finance costs.
Exactly, increased finance costs. So what will happen if there is huge increase in finance cost and going, maybe the company is gearing, what will happen?
Increased cash outflow.
Increased cash outflow for the loan. And another main important point, existing loan covenants might have been breached, due to which we need to pay back the whole amount of the existing loan back to the creditors of the company. And in that case, it may affect the company's going concern ability, right? So you can talk about that. Then, in addition to which, any other business risk here?
New regulatory requirements.
Exactly. The company has got some of the new regulatory requirements. I have mentioned you earlier about the two set of points associated with the new regulatory requirements. Either the company need to comply with that or not to comply with that. What happens if a company complies with that? There will be compliance costs and legal expenses for the compliance requirements. And if the company haven't complied with that, what will happen? Then there will be huge amount of penalties and fines for the company, and it might also result in reputational damages for the company. So these are the business risks associated here. And what are the risk of material misstatements from this phase? What are the risk of material misstatements here? Any possibilities having risk of material misstatements? Yes, there are. What are the possibilities?
Non-compliance with laws and regulations.
Okay, the company might not have complied with laws and regulations, and for which the company might need to recognize the amount of what?
Provision.
Provision. But is it actually necessary here? Because the company has already spent the amount for the new production line, right? Okay, so it is not that necessary here. Okay. Then, other than that, what else?
Loan should be split between current and non-current liability.
Exactly. The loan should be split between current and non-current liability. And for the timing, is it a current liability or a non-current liability? Is it a current or non-current liability?
Current liability.
Current liability. Company have taken a loan of 30 million for the new production line, and they haven't mentioned about whether it is current liability or not. Instead, they have given another line here that 2.5 million of the loan represents an overdraft, which has been converted into a long-term finance. So what should be the accounting treatment here?
Non-current liability.
So it's a non-current liability. Then what should be the accounting treatment here? They have already recognized it as a current liability, right? Because that was an overdraft. An overdraft, we used to treat it as a current liability. And what is the accounting treatment that is required here? That overdraft should be de-recognized. And instead of which, this 2.5 million should be recognized as a long-term finance, right? And there can be chances that the company might not have restated the 2.5 million in the current liability to the over long-term liability session, thereby understating the amount of long-term liabilities and overstating the amount of current liability. That will be the risk here. Then, in addition to that, any other risk? Any other risk? Nothing? Still, there are many risks. Two more main risks is associated here. What else? So what's the purpose of this loan? Whenever you get a
Can
question,
the finance cost be capitalized and
Exactly.
wrong accounting?
Exactly, that's a point. See, whenever you get a point on the loan, you must first find the reasons of that loan. So what is the aim or purpose with that loan amount? You need to consider like that. So as you can see over here, this 30 million loan is being taken for the purpose of building a new production line. And it comes under the category of IS 23 borrowing cost here, right? Because in case of a particular asset that takes a substantial period of time for getting it into intended sale of use, then we need to consider it as a qualifying asset. And the amount spent as finance cost on the qualifying asset can be capitalized. Therefore, here we need to mention that the amount of interest spent on the 30 million loan should be capitalized along with the capitalization of the new production line. However, there can be chances that the company might have treated it as a finance cost, leading to understatement of the assets and overstatement of company's expenses. Okay, then what else? Is there any other risk? Why the company is building a new production line? Why? What is the reason for which the company is building the new production line? Because the company won't be able to use its existing production facility due to the changes in law, right? So we are creating a new asset here. At the same time, one of our assets is getting useless. So which is the standard that affects there? I've given you a clue. So which is the standard that affects there? Any idea?
So is it the impairment?
Exactly, that's impairment. So well, it's a very strong indicator of an external impairment, right? Because the company's assets won't be able to use for the future production. And that is why we are building a new asset. So as per IAS 36 impairment of asset, we need to recognize impairment for the existing company's production line. And how do we need to calculate the impairment? It must be taken at the higher or lower. How do we use to calculate the impairment?
When carrying amount exceeds recoverable amount, we have to.
Exactly. When the carrying amount exceeds the recoverable amount, we will call it as an impairment. So we need to consider the recoverable value here. And recoverable value will be higher of which amounts?
Higher of
Value in use
Value
and
less
fair
cost
value
is the
cost to sell.
value in the use. So we must mention that the company should first of all consider its fair value less cost to sell and value in use from the assets. And basically, the value in use of these assets will be low. So fair value will be comparatively high. Therefore, the company should consider whether this amount of fair value is lower than the amount of carrying value of the asset. And if the amount is less than the carrying value, then the company need to recognize an impairment for the asset. And if the impairment is not recognized, the impairment expenses will be understated and the profit of the company and the value of assets will be overstated. So that's a risk of material misstatements associated here. Okay. Then, in addition to which, there's a small paragraph over here as well. But this one is not in relation to the first page because here the examiner is exclusively mentioning as by using exhibit 2 and 3, we need to find out the business risk and risk of material misstatement. So we don't want to consider exhibit 4 while considering the business risk and risk of material misstatements. So they have given some extracts of the draft profit and loss account of the company. And they are mentioning that the revenue of the company is 12,500. The prior year, it was much higher. Operating cost of the company has decreased comparatively. Then the finance cost of the company remains the same. and the profit and loss before tax is converted into a huge amount of loss as compared with the prior year. Then the draft statement of financial position has not yet been prepared, but M states that the total asset of the Growl company at 30th November 2012 are 180 million, and the cash at bank is 130 million. Based on the draft figures, the current ratio is 1.1 and the quick ratio is 0.8. So what is any other possibility? Is there any other possibilities of having business risk here? Any other
So
possibility?
finance cost is same, but we have taken a new loan.
Okay, fine. All right. So what will be the risk associated with that?
So finance cost may be understated.
But we have already mentioned about the risk there, because there is a possibility that they might have already categorized the amount as part of the company's borrowing cost, right? Because the loan was taken for the qualifying asset. So there can be chances that that amount might have been capitalized. But you can mention this in relation to the overdraft. From the date on which the overdraft is converted into long-term finance, we will be able to treat it as a borrowing cost. However, till the date, we need to consider interest on the overdraft, but that interest on overdraft might not be calculated properly, leading to under or overstatement of the finance cost. That can be mentioned as part of a risk of material misstatement. So what will be the business risk here? What will be the business risk? What's the business risk here? Any possibilities of having business risk? Anything, guys? Anything else? You can consider the variation that happened over the company's revenue. You can calculate the trend in revenue as well as the trend in operating cost. And you can mention that the revenue of the company has been decreased significantly, and there are not that corresponding decrease in the amount of operating costs. And the company's profit has already been converted into losses. So in case if there is any additional repayment that is necessary for the amount of finance cost, or if there is any other legal expenses that need to be paid by the company also additionally comes, then the company will not be able to meet that limits, as well as the company will move on to much higher losses. And in addition to which, while looking at the company's cash balance, comparatively the cash balance is very low, then the company's current ratio is not that strong. It is just above the current liabilities, and the quick ratio is already below the certain limits. It's less than 1. It's just 0.8. So this all represents that the company might face difficulties in relation to the profitability, as well as the company might also face difficulties in meeting working capital requirements. These are the additional business risks associated here. Is it clear, guys? Okay. So these all are the risks, that is the business risk as well as the risk of material misstatements in relation to the Growl company. And this will be the way in which we will be finding out the business risk as well as risk of material misstatements. So while writing the points of business risk, you will be getting roughly around 1.5 marks to 2 marks for each of the business risks, but consider it as 1.5 mark itself. So if you're getting a question for 10 marks, roughly write about 6 or 7 business risks. And when you're getting a question on risk of material misstatements, you will be getting up to 3 marks for risk of material misstatements. Basically, the examiner mentions like that. You will be getting up to 3 marks for risk of material misstatements. But ensure one thing, that the 3 marks will be received only if you're getting a risk which is purely based on audit standards. That you need to calculate the materiality. You will be getting 1 mark for the materiality calculation and its explanation. Accounting treatment, what will go wrong and impact. If you're writing this particular risk in this order with all the related items, then only you will be getting up to 3 marks. Or else the normal risk, which are being expressed in general terms, it will get only up to 2 marks. So please take an assumption that you consider like this for every risk, irrespective of whether it is a risk based on accounting standard or general case scenarios, you will be getting 2 marks. 2 marks. Just consider or assume like this, 2 marks. So you will be able to create a balance of risk. Because or else there can be chances that you might be assuming that you might get 3 marks for a particular risk, and you might not be getting that. And you will be missing some points as well, so that your marks will be, overall marks will be decreased to a greater extent. So consider 2 marks for each risk. So if you're getting a risk question for 20 marks, then try to write 10 points. But ensure one thing, for writing 20 marks question, you might be getting 36 minutes. So you must complete all the 10 points within 36 minutes. And if you're not able to complete within this stipulated time, then skip that and move on to the next question. Or else you won't be able to complete the total exam on time. So always consider like this. For each business risk, you will be getting 1.5 marks. And for each audit risk, you should assume that you are getting only 2 marks. And for 20 marks, try to incorporate 10 points at least. And you must complete these 10 points within the allotted time. That is what you need to consider. For each 1 mark, you will be getting 1.8 minutes. So please assume like that. Okay. So we have already discussed about some of the major requirements in the 50 marks area, which includes the business risk area, plus risk of material misstatements area, plus audit risk area, plus analytical procedures as well. So these are the major areas in the 50 marks. And now we are moving on to the another area, which is based on additional information. So you might be getting a question like this. Evaluate the audit risk to be considered in planning the audit of TED company. In addition to that, recommend the additional information which would be relevant in the evaluation of audit risk. So the examiner is requesting you to write the additional information that you need to request to the audit partner to complete the audit properly. So we have also created a note for the additional information as well. So basically the additional information is almost equivalent to the response that we used to write in your AA paper, auditor's response. So here the only difference is the fact that the examiner is telling you, or the audit partner is telling you, that the company is going through some set of cases. And from that cases, you used to find out the audit risk. But you don't know to what extent that risk affects the company's audit. So to get a proper understanding about this, you might be required to have much more information about the particular case. And you will be requesting this information as part of the additional information. Say, for example, it may be mentioned in the question like this, that the company has received 20,000 from the customers for manufacturing a bespoke inventory. Then in that situation, you may state that a risk arises there, that because the company is getting 20,000 from the customers, as per IFRS 15, the company should recognize about that 20,000 only once the performance obligation is being satisfied. However, there can be chances that the company might be recognizing this amount as part of the company's revenue before the performance obligations are satisfied, thereby leading to overstatement of revenue, understatement of deferred income. So this is a risk you state there. And you need to understand whether this risk actually appears there or not. And for that, what should be the additional information that you require? You need to have an understanding about the revenue recognition policy of the company. For what purpose? To ensure whether the recognition of sales is appropriate. So this is the additional information you require there. So you need revenue recognition policy of the company. For what purpose? To understand whether revenue or the sales are appropriately recognized. Then you used to mention, when a company is having a new client, you used to mention that the company's new clients' opening balances might be misstated. So how can you ensure that whether a company's opening balance is being mistaken or not? So well, you can do one thing. You can obtain copies of the working papers from the previous year auditor. And if you get copies of working paper from the previous year auditor, then automatically you will be able to understand whether the opening balances are misstated or not. Then you used to mention that if a finance director is appointed newly to the company, then the finance director might lack adequate amount of experience, and due to which there can be possibilities of having increased amount of mistakes in the financial statements. This is what you used to mention. And in that case, how can you ensure that? You can obtain the details of experience and qualification of the staff to assess its competence. So you will be asking an additional information. What is additional information you are requesting here? You are requesting details and experience and qualification of the staff. So you replace the staff with finance director. For what purpose? To assess their competence. So this will be the additional information you will be requesting there. So the additional information is all about like this. You will be requiring some set of documents or informations. You will be required some set of documents or information. Plus you will be doing some set of procedures here. Plus you will be having some sort of purpose here. So this is how you need to write the additional information. Document. Here, the revenue recognition policy is the document. Procedure, you're ensuring something. What you're ensuring, your purpose is to understand whether sales are being appropriately recognized. Here, copies of working papers from the previous auditor. That's a document. For what? What's the procedure? You need to perform something. That you need to perform testing on the opening balance. That's your purpose. Then, next one. So you used to mention that there can be chances of having misclassification in several accounts. You used to always mention about the misclassification about the research and revenue expenditure, research and development expenditures, revenue and capital expenditure. Yesterday, while doing analytical procedure, we have mentioned about the misclassification between cost of sales and operating expenses. And in all those cases, what we can do, we can obtain the breakdown of cost of sales and operating expenses. For what purpose? To review for whether it is being misclassified between proper accounts. So basically what we can state here, in case if we are talking about the research and development, you need to obtain the breakdown of research and development expenditure for what purpose? To review whether it is being misclassified between proper accounts. So the only thing that you need to do is to restate the amount of cost of sales and operating expenses between the accounts that might be misclassified. You need to include the names over there. So that is how you need to consider the additional information. So while writing additional information, it is nothing but you are requesting the auditor, your audit seniors or your audit partner to provide you with some additional information to understand what is the actual risk that arises from the scenario. And this is how you will be writing the additional informations. Then next one, again, same thing. In this question, the question we discussed earlier, in the broad question, we have mentioned that the company might not have recognized impairment expenses. So how can you ensure whether the impairment expenses are included or not? We can obtain a disaggregation of the main category of expenses included in the operating expenses. For what purpose? Which will confirm that the impairment losses has been included. So if you are having any doubt that whether the company has charged amortization, or if you have got any doubt whether the company has charged depreciation expenses or a new asset, what you can do? Disaggregation of main category of expenses included in the operating expenses, which would confirm the amortization expenses has been included or the depreciation expenses has been included. So you only need to replace here with the term impairment losses with whatever other expenses that you need to find out. So this will be the way in which you will be providing additional information. So always keep this one in mind while writing the additional information. You need to mention the document. Then you need to mention procedure. Procedure means that you need to inquire something, then obtain, then review, recalculate, reperform, ensure, inquire. All these are the procedures. And finally, you need to mention about the purpose as well. So basically, the purpose will be to prove the risk, whether to understand that the risk is existing there or not. That is the purpose of the additional information. So this will be the way in which you will be including additional information within the scenario. Is it clear, guys? So, well, there are many other points about which we have already discussed in our session in the regular classes. So please revise the past areas, as well as those who are not appearing in the regular classes can also go through these points and you will be able to understand the points as well. Okay, so this will be the way in which you will be writing the additional informations. So when it comes to the additional information, it is nothing but just consider like this. There will be certain risk from the scenario. So your examiner will be asking you to find out the risk firstly. And after that, you will be also be requested to provide the additional information as well. And in that case, first of all, you must write the additional information only against the points that you figured out as the audit risk. So for 5 marks, you only need to include 5 additional informations. So let it be any sort of mistakes in the financial statements, you will be able to ask additional information corresponding to that by using this file. So please go through this file. This file is also available for downloading in the Eximus website. Okay. All right. So this is the third requirement. So we understood about the way in which we need to include the additional information within the scenario. Then again, you will be getting another important question from this area. That's the area of audit procedures. So audit procedures is one of the most important area because you will be getting questions from the audit procedures for around 10 marks, mostly for around 10 marks in all the 50 marks question. And this question is repetitive in every attempt. There are no attempt in the AAA history where the audit procedures are not included as part of the 50 marks question. And the audit procedures will also be asked in your 25 marks question as well. In the third question also, they will be sort of having audit procedures or PFI procedures. But they can also be questions in relation to the procedures for KPIs and so on. So there can be chances like that. So please consider this area as very important. So you need to write the audit procedures. So there is a relationship between the audit procedure and the additional information. In the additional information, you are writing about the documents or the informations you require, plus the procedures that are used to perform and the purpose that are used to mention. And when it comes to the area of audit procedures, you need to restate this. Audit procedures, here you will be giving more importance for the procedure. So that procedure should be written in the first phase. Then the documents or the informations that you require should be written, plus the purpose should also be required. Say, for example, procedure, recalculate what the bank reconciliation statement, for what purpose? To ensure its mathematical accuracy. So this will be the procedure. We need to recalculate what we need to recalculate the amount of bank reconciliation to ensure the purpose. What's our purpose? To understand whether it is mathematically accurate. Then next, review the notes to financial statements. So we have got a review as a procedure, notes to financial statements as a document. For what purpose? To ensure that the company has provided disclosures in relation to IAS 36 impairment of assets. Okay, then next, obtain will be the procedure. Confirmation from the company's advocate or legal advocate. For what purpose? In order to understand whether there will be probable cash outflow for the company in relation to the litigation and claim. So that will be the audit procedure. Then next one, obtain external confirmation from the customers. For what purpose? In order to understand whether the amount of receivables is recoverable from the customers. So this will be the way in which you will be writing the audit procedures. So it will be somewhat related to the additional information, but in the additional information, you will be giving much more importance for the information. In the audit procedures, you will be giving importance for the procedures that you need to perform. And when it comes to additional information, the only purpose is to understand whether that risk actually exists in the scenario or not. And when it comes to the audit procedures, you will be finding mistakes at the assertion level. You need to understand whether there are any mistakes in the financial statements. And in order to find out the mistakes in the financial statements, you will be performing certain set of procedures. That is something called audit procedures. Okay, so this is how you will be giving up the audit procedures area. So now I will just do one thing. I will dictate to you some of the common procedures that you can include within your exam, and you will be able to write the audit procedures by using these common points. So please note it. So please give a heading called common substantive procedures or common audit procedures. Please write a heading like this, common audit procedures. And you will be able to use these common procedures as part of the 50 marks area, as well as part of the evaluation of KPIs, key performance indicators, then about the PFI, as well as in the areas of due diligence as well. Or in the area of forensic audit also, you'll be able to use the same procedures. So please write common procedures. Just write common procedures. Okay, and please write down the first point. Discuss with the management. Discuss with the management. Discuss with the management about dash. Discuss with the management about dash. Give a dash there. Discuss with the management about dash. In order to understand dash. In order to understand or confirm or ensure dash. In order to understand or confirm or ensure dash. So inquire or discuss with the management about dash in order to confirm or ensure dash. Then next one, obtain written representations from the management. Obtain written representation from the management. Obtain written representation from the management to confirm dash. To confirm dash. Obtain written representation from the management to confirm dash. The next one, recalculate or reperform the amount of dash. Recalculate or reperform the amount of dash to ensure the mathematical accuracy. Recalculate or reperform the amount of dash to ensure mathematical accuracy. Next one. Obtain external confirmation from the management. Obtain external confirmation from dash. Obtain external confirmation from dash to confirm dash. Obtain external confirmation from dash to confirm dash. Obtain external confirmation from dash to confirm dash. Then next one. Perform analytical procedures. Perform analytical procedures. Perform analytical procedures by comparing dash with the previous year. Perform analytical procedures by comparing dash with the previous year, or industry data, dash with the previous year or industry data, and investigate any significant variances. And investigate any significant variances. Perform analytical procedure by comparing dash with previous year or industry data and investigate any significant variances. Next one, review correspondence between dash and dash. Review correspondence between dash and dash to confirm dash. Review correspondence between dash and dash to confirm dash. Next one, review board minutes. Review board minutes. Review board minutes. Review board minutes in order to ensure dash. In order to ensure dash. Review board minutes in order to ensure dash. Then review the draft accounts. Review the draft accounts. Review the draft accounts to ensure that the disclosures for dash are complete and accurate. The disclosures for dash are complete and accurate. Disclosures for dash are complete and accurate and are in accordance with accounting standards. Disclosures for dash are complete and accurate and are in accordance with accounting standards. Okay, so that's it. So please go through that points. Please go through all the points that you have written now. And after that, we will discuss it. Okay, all right. So let's discuss about the points that I've written now. So we are talking about the common substantive procedures. So basically, you need to consider like this. When you get a case and when the finance director or the company's anybody is talking about some kind of issues within the scenario, you need to consider like this. What can be the thing that I can discuss with the finance director now? Or what should be the thing that I should discuss with the management now? And that is what you need to write in the first point. You should discuss with the management about dash in order to ensure or to understand dash. Suppose if the finance director have mentioned that they have reduced the amount of provision as compared with the prior year, then you will be asking about this. Discuss with the management about that, about the reduction of the provision in order to understand whether the reduction have been performed in accordance with IAS 37 provision contingent liabilities and contingent asset. Then next, say for example, if the management might be stating that they have reduced the amount of impairment expenses, or they haven't charged any kind of amortization expenses for an intangible asset, maybe mentioned like that. In that case, we need to understand whether these assumptions are reasonable, and we must also ensure that the management is agreeing to this assumption. So how can we do that? The best thing that we can do over here is the fact that we can collect some kind of written representation from the management. So you will be able to obtain written representation, and you will be stating this point, obtain written representation from the management in order to ensure that the assumptions on the basis of this they have included the amount of amortization is reasonable. So for that, you will be obtaining written representation. Then you will be able to recalculate anything. Let it be any kind of calculation. Wherever there is calculation, there is always a possibility for recalculation. You will be able to recalculate the amount of amortization, impairment. You'll be able to recalculate the amount of finance cost in order to understand the mathematical accuracy. So please consider whether there is any sort of calculations in the scenario. And if there is calculation, you will be able to recalculate that. Then the next one, you need to obtain external confirmation. So look at a scenario and understand who all are the external parties associated there. Say, for example, if the company is talking about a provision for the refund liability, then there the external parties will be the customers. So we can obtain external confirmation from the customers about the procedures by which they are planning to return back the product to the company. So it may be mentioned about some kind of litigation claims. And in case if the company is talking about some sort of litigation claims, and then that situation, the external party will be the person who charged litigation or filed case against the company, or the third party might be the company's lawyer. So you will be able to obtain external confirmation from the company's lawyer in order to understand whether there will be a probable future cash outflow for the company. Then next one, sort of analytical procedures. Well, you know that the analytical procedures are basically the comparison between the current year or prior year, or between the current year and the industry standards in order to understand whether there is any possibilities of having unusual relationship or whether there are any possibilities of having significant variances. So for that case, what we can do there, the best thing that we will be able to do is to have an overall check on the company's balances. So you can mention like this. If you're talking about receivables, perform analytical procedures by comparing the receivables days or receivables turnover with the previous year or with the industry standard, and discuss with the management in case of any significant variances. If you're talking about a provision, then you will be able to compare the current year provision with that of the previous year. If you're talking about any kind of amortization expenses, so you can calculate the current year amortization expenses with that of the previous year amortization expenses, considering whether there is any increase or decrease in the amount of the company's assets, intangible assets. So you'll be able to mention like that. Then what I mean by correspondence, basically the correspondence is communication between two persons. So you need to consider in every situation which all are the two persons associated here while the company is talking about some issues. So basically every time the first party will be the company and only the second person need to be filled. So review the correspondence between dash and dash. The first dash will be the client company and second dash will be whoever who is being mentioned in the question. Say for example, the company is talking about a receivables balance. Then automatically review the correspondence between the client company, mention the client company's name there, and the customer in order to understand what you need to understand in that situation, in order to understand whether the amount payable, the need to be payable by the customer is recoverable, which means the receivables from the customer is recoverable or not. Say, for example, you might be talking about a law and regulation. And in that case, basically, the two parties will be the company and the company's lawyer. So you will be reviewing the correspondence between the client company and the lawyer in order to understand whether there will be any probable cash outflow for the company. And it is mentioned in the question that some of the customers are planning to file litigation against the company. So who will be the second party there? the customers will be the second party. So we can review the correspondence between the customers and the client company in order to understand whether the customers have already filed any sort of litigation or claims against the company for which provision needs to be recognized. So this is how you will be reviewing the correspondence. Then next one, it's about the review of board minutes. You know that whatever happens within an entity will be discussed in the company's board meetings. So in order to understand whether a company is planning to make some of the employees redundant, or in order to understand whether the company is planning to make any of the new investment in the amount of assets, in order to understand whether the company is ready to call back a company's particular product, in all these cases, you will be able to review the board minutes. So whatever may be the case, in order to confirm whether the company have got any of the going concern difficulties and all, then we will be able to review the board minutes. Review the board minutes forward in order to understand whether there are any subsequent events that may affect the going concern ability of the company. Review the board minutes in order to understand whether the company has negotiated loan with the bank, and so on and so on. And very finally, it's a very common point, you will be able to review the disclosures, and at any point you will be able to review disclosures, and you can write it in relation to any of the points. So for example, provision and contingent liability. Then review the financial statements in order to understand whether the company have provided all disclosures in relation to the company's provision, contingent liabilities, and contingent assets as per IS 37. Or if the question is mentioning about changes in accounting policies, review the draft accounts to ensure that whether the company have provided all disclosures in relation to changes in accounting policies. So this is what you need to mention in relation to the procedures. So this is very simple. The only thing you need to consider here is while going through the question, just ask some questions to your question. Okay, just ask some questions to your scenario or your question. So you need to ask the question like this. In this case, from where I can obtain external confirmation? In this situation, who are the two parties who are involved, in order to understand whether there is any possibilities of obtaining correspondence? So what are the things that I can compare with the prior year? So what is the possibility of having some sort of discussion with the management? So here I will be able to obtain written representation, but about what I need to obtain written representation, answer the question. Then what is the possibility of having a recalculation here? So consider like this. So these are the key points that you keep in mind, and this must be your benchmark, and you must be able to find corresponding points to your benchmark. So if you're asking like this, what all are the possibilities of having discussion with the management? Then you need to obtain written representation. Then you need to obtain external confirmation. Then you need to review the correspondence. You need to recalculate the item. You need to review the bond minutes. Then you need to review the disclosure notes. In addition to which, you must also be able to perform some sort of analytical procedure by comparing something with the other things, which means comparing current year with that of the previous year. And this is the way in which you will be finding out all the risks associated and corresponding audit procedures in relation to the 50 marks question. So we have understood the way in which we need to write the audit procedures as well as the additional information. So let me remind you one more time. When writing the additional information, the only thing that you need to focus is on the procedures, additional information. You need to process on the documents and the information, and you will be writing the procedures after that, and finally purpose. And when it comes to the audit procedures, you will be writing the procedures in the first page. Then next you will be including the details of the documents, and finally the purpose will also be mentioned. So this is how you will be writing additional informations, and this is how the 50 marks questions major areas are being covered by. Okay. All right. So these are the some set of main areas which used to be asked in almost all the questions. You used to have a question on audit risk, additional information, audit procedures. And there can also be chances of having plus business risk as well. Then we will have a short discussion on the ethics part. So basically talking about the ethics part, we will be considering two things here. There will be fundamental ethical principles, which used to appear in your exam as part of the professional issue. And there are also some threats to professional ethics. So these are the two things that are being regularly asked in the 50 marks area, as well as in your 25 marks area. Basically talking about the fundamental ethical principles, we will be having 5 fundamental ethical principles: integrity, objectivity, confidentiality, professional behavior, professional competence, and due care. So which all are the fundamental principles? Integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. So integrity means that you must always be straightforward in all your business and professional relationship. You should not do any type of unhonest activities. You should not do anything that may affect your professional behaviors. That is what it's mentioned as integrity. You must always be straightforward, and you must be honest in all kind of business and financial relationships. Then the objectivity means that you must not be biased. Your professional judgment should not be influenced by anyone else. Whatever the judgments are being taken by the auditor should be the auditor's judgment itself. It must not be directly or indirectly influenced by anyone else. That is what objectivity states. Then confidentiality. And the confidentiality principle means that the confidentiality includes two principles. The first thing, once you have obtained an information from the client, it should not be disclosed to any third party. Second, once you have obtained an information from the client, you should not use it for any other purpose other than the purpose for which the information is being obtained from the client. So these are the two things that you need to consider in case of fundamental ethical principles. So confidentiality means two things. First of all, you should not communicate any information to third party once you have obtained an information from the client. And the second thing is the fact that you should not use it for any other purpose other than for the purpose for which the information is being obtained from the client. Then professional competence and due care. You must always keep on updating your professional knowledge, and you should accept a work from the client only if you have got adequate amount of knowledge with regarding that. And your knowledge should always keep kept up to date. And while providing any kind of service to the client, you may be using the most up-to-date legal and regulatory requirements. That is something called professional competence and due care. And finally, it's a professional behavior. The professional behavior states that you must act like a professional, and you should not do any act that may discredit your professional body or the ACCA or your any other accounting profession or the accounting professional body as a whole. You should not do any act that may discredit the total accounting profession. That is something called professional behavior. So these are the 5 fundamental ethical principles. And you will be required to find out the professional issues. And basically the professional issues are the things that appear against the fundamental ethical principles. Say, for example, it may be mentioned in the question that the audit partner has requested the audit manager to not to disclose some of the findings of the audit work. And they are hiding that something that relates to the audit work they have already performed. In that case, it will be against the integrity, because it's a factor that affects the company's, auditor's integrity, because he is not acting honestly. So if there is some kind of malpractices done by the auditor, then it is against the integrity. So let it be any kind of threat. If an auditor is performing some act for his personal benefit or for the benefit of his near ones, or due to some kind of familiarity or due to some kind of threatening or something, it may affect the objectivity. Anything that affects an auditor's professional judgment will be a professional issue that affects the objectivity. If the auditor is not following proper laws and regulation, and if the auditor is not following standards, it will act against the auditor's professional behavior. And if the auditor is disclosing some set of information to the third parties, it will come against the auditor's confidentiality. And finally, if the auditor performs some act that is not in accordance with standards, or if the auditor is not following the standards, or if the auditor is suggesting some kind of mistakes, or if the auditor is not suggesting appropriate accounting treatments or audit procedures to the junior auditors and to the seniors, then it will be against the professional competence and due care. Anything that shows that the auditor lacks knowledge will be against the professional competence and due care. And this is how we will be considering the professional issues from this area. And these are the fundamental principles and related professional issues. And now we have got some set of threats against the objectivity as well. And the threats against the objectivity are basically comes in 5 rounds. That's a self-interest threat, self-review threat, advocacy, familiarity, and intimidation. So let it be any kind of threat that may make an auditor to give importance to the personal interest rather than professional interest will result in self-interest threat. Say, for example, if my wife is working in client company, then definitely I might be acting in her benefit. So that creates a self-interest threat. If the client company is providing some kind of loan and advances for me, or if the client company is providing some kind of leisure services or any other gift or hospitality services, then I might be acting in the interest of the client company. Again, it may create self-interest threat. So self-interest threat is the threat that might be affected by an auditor when an auditor gives importance for his personal interest rather than giving importance for his professional interest. Then the next one is a self-review threat. And self-review threat basically arises where an auditor have already performed a work for the client, and now the auditor is performing the audit of the client. Therefore, there is a possibility if I am reviewing my own work, then definitely I won't be figuring out any mistakes that I have already made in the financial statements. So I might be trying to hide those mistakes in the financial statements, and it might lead to self-review threat. Then next one is advocacy threat. The advocacy threat appears where the auditor represents the client company to some other bank, or where the auditor is advocating on behalf of the client company. Auditor might be acting in behalf of and in favor of the client company. So when I've already advocated the client company at some position or to someone, then automatically at a later on stage, I won't be able to talk again with the client company. And in that case, I will try to talk in behalf of the client company again, which may lead to advocacy threat. Then familiarity threat. Basically, the familiarity threat arises where the auditor is having close relationship with the client company, or when there are close relationship with the parties that are involved in the client company. Again, when there is a auditor's personal or professional relationship in the client company, automatically there is a possibility of having familiarity threat. Say, for example, I have been employed in the client company for 5 years as part of the audit team, then automatically there is a common relationship between them. Or if my wife is part of the client company, then there is again causes of having familiarity threat. And if my wife is there in client company, it may result in both the familiarity as well as in the self-interest threat. So whatever may be the cases, if there is any possibilities of having a threat that arises due to familiarity between an auditor and a client, then it may result in familiarity threat. Finally, it's about the intimidation threat. And the intimidation threat arises in 3 cases. First case, coercion. Coercion means that the client is threatening me. Client is telling me that they won't be providing me adequate amount of audit fees if I've given them a non-favorable audit report. Or the client is telling me that I won't be paid if I am not giving an opinion in their favor. Or the client is mentioning me that they will not provide me the next year's audit work. They will charge legal charges against me. And if they're stating something like that to give a proper opinion for them or in their favor, then it may result in intimidation threat. Then next one, undue influence. If there is a person who is in position to influence me by using his position, it may result in undue influence. Say, for example, the person A, who was my previous audit partner, is now employed with a client company. So automatically, once I went there as an audit manager for the audit, then that person will be able to influence me on the basis of the powers he acquired earlier. So automatically, it may result in a intimidation threat. And also, if the client company is limiting the scope of audit, in that case also, intimidation threat will appear. Say, for example, if the client company is not giving me adequate time to perform the audit, they're requesting me to complete the audit in 2 months' time. They're not giving me adequate permission to contact the finance director. They're not giving me adequate access to books and records of the entity. In all these cases, the possibility will be intimidation threat. So the intimidation threat will arise when the client is not providing us the permission to contact other parties in order to complete the scope of audit. So whatever may be the case where there is the limitation in the scope of engagement, it might result in intimidation threat. So these are the 5 types of threats that affects a company's audit. So there will be intimidation threat, self-review threat, advocacy, familiarity, and self-review. These are the 5 ethical threats that arises in each of the cases. Well, I was discussing all these threats in a very quick manner because already we have spent more than 2 or 3 days on this ethical threats area while we were having the regular classes. So please go through those lectures once again to understand more about the session. Okay. And we have also mentioned about some of the safeguards. So whatever may be the case, when you're having some difficulties or ethical threats, definitely you can talk about that with the client's audit committee and those sides with governance. Then if there is any issues that may affect a particular person in having familiarity threat or self-interest threat, we can remove that particular individual from the audit team. Then whenever there is a position of reducing the quality of audit, in that cases, we will be able to obtain external review of the work done. And in case of familiarity threat, we can rotate that person or we can use the another person alternative, and we will be removing this particular person from the audit team. And in case of self-review threat, we can use a separate engagement team, but we have already mentioned that in case of listed company, we won't be able to do this. So these all are the basic safeguards that are in relation to the ethical threats. And please revise the earlier lectures in relation to this because it will take a lot of time to discuss the safeguards. And I've included some of the additional threats in relation to auditing multiple entities in the competent market and their related safeguards also. And some current issues were also discussed in the session. Please go through the notes to revise that as well. And if there is anyone who haven't attended my class, then I have uploaded a note in the drive called ACCA AAA notes by Alan. And please download these notes to get a better insight about the ethical threats. So basically, when it comes to the ethical threat, the answering part is little different. First of all, you need to identify the threat from the scenario. Then you need to explain the threat. And finally, you need to provide the related safeguard as well. Okay, related safeguard as well. So these are the three things that you need to write in relation to the ethical part. So first of all, identify the ethical threat, then explain the ethical threat and provide the related safeguards also. Then only you will be able to get good score in the exam. Say for example, if it is mentioned in the scenario that the client company have requested us to complete the audit within 2 months time, sorry, maybe 1 month time. Then we need to mention the same thing like this. The client's finance director is requesting the auditor to perform the audit within 1 month. Therefore, it may lead to intimidation threat. Then explain that. The intimidation threat is created here because the auditor won't be able to obtain sufficient and appropriate audit evidence in such a short span of time. And if the auditor haven't obtained sufficient and appropriate audit evidence, the quality of the audit will be reduced to a greater extent, and thereby the opinion provided by the auditor will not be correct. And this is also limiting the scope of audit, because as per ISO 500, audit evidence, and auditor need to obtain sufficient and appropriate audit evidence in order to form conclusions. And since the auditor is not having sufficient time, you won't be able to do that. And what should be the safeguard? The auditor should discuss this matter with the clients, those charged with governance and audit committee, and the auditor should request them to provide additional time period to complete the audit. And if they are not willing to provide additional time period, then the auditor need to mention them that they won't be able to complete the audit on time. Therefore, the auditor should request again to the audit committee to provide them with additional time. And again, if they are not willing to provide, then the auditor should consider resigning from the engagement, and the auditor should not provide an audit report on the client's work. So this is what you need to give us a safeguard. So this is how you will be giving up the answers for the area of ethics. So first of all, you need to identify the ethical threats. You need to explain the ethical threats, and you must also provide related safeguards for that. All right. So this is all about the ethics part. Well, it's a very quick sum up of the ethics part. As I've already mentioned, we have spent much more days on the ethics part. So please go through those sessions. All right. So these are the key areas in the 50 marks. So we have already discussed the 50 marks areas in a very large span. So when it comes to the 50 marks area, we have basically got one question on the risk, and we have discussed all the risk related scenarios. First risk will be an audit risk. There can also be chances of having risk from the area of risk of material misstatements, business risk, then risk of material misstatements or audit risk plus analytical procedures. Then second, we will be having questions on additional informations, about which also we have discussed. Then third, we have discussed areas of audit procedures. And fourth, we have also discussed about the ethics part as well. So these are the main areas in the 50 marks session. So basically, when it comes to the audit risk, the reporting format should be, and the audit risk and risk of material misstatements reporting part should be, first of all, you need to write the materiality, then you need to give the accounting treatment, then about the what went wrong and the impact. And the business risk, when it comes there, first of all, you need to identify the business risk, then you need to explain that, and you need to find the impact over the company's profitability, cash flows, going concern, reputation, and so on. Then when it comes to additional information, then you will be giving, first of all, the information or the documents that you require, plus the procedures you will be performing there, plus the purpose of those procedures. And when it comes to the audit procedures, you will be writing the procedures plus document plus purpose. And you need to consider there about the amount of discussion that you can make with the management, then the written representation that can be obtained, scope of recalculation, analytical procedures, obtaining external confirmation, then obtaining, reviewing the correspondence, then reviewing the board minutes, then reviewing the notes to financial statements, as well as having a proper understanding about the company's analytical procedures by performing comparison between current and prior years. So these are the points that you need to write in relation to audit procedures. Finally, from the ethics part, you need to consider whether there are any professional issues that are associated with the integrity, objectivity, confidentiality, professional competence, and due care. And you must also consider the possibilities of having threats such as the self-interest, self-review, advocacy, familiarity, and intimidation. So these all are the areas that we need to cover in relation to the 50 marks. So I hope you got an overall idea about this area. Well, we have taken almost, I guess, around 30 days of class for this 50 marks area. So, which was a very lengthy period, which we have done during our regular sessions. So this is a very small sum up for the area. And we have just given 2 questions as well in order to get a scope or understanding about the area which we have already discussed. So this is just a sum up of the total area. So please go through the regular sessions in order to get more detailed idea about this area, and please practice as much as questions as you can. Okay. So this is all for the day, and we will be doing the 25 marks area from tomorrow. We will be focusing more on the 25 marks area tomorrow. We will be covering almost all the types of questions as well as of the way in which the questions are being asked in your exam in the 25 marks. Okay. All right, guys. So we'll have a more detailed discussion about the 25 marks area tomorrow. So please revise the areas of 50 marks. Please go through the notes of audit risk as well as the areas of business risk. And in case if you've got any doubts in this area, please ask me tomorrow. Okay. All right. So that's it. So please go through the areas once again and revise as much as time you can, and try to practice maximum amount of questions, and ensure one thing, that you are not roughly just going through and reading the questions and answers. You must practice the questions on your laptop itself, because since we are having computer-based exam, it is very difficult to manage the time. So in order to ensure that we will be able to complete the questions on time, the only way in which we can manage is that by practicing maximum numbers of questions as we can. So please practice maximum number of questions, and as well as in addition to that, you must also try to revise all your SBR standards as well as the IS files and IAS standards plus the consolidation part of the SBR. Okay, so please revise that as well. So these are the areas that we need to consider in relation to the 50 marks. All right. So that's it, guys. Thank you so much. Bye.
Thank you, sir. Thank you, sir.